Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston, realtor here in Victoria, and this is a show where we cut through the noise and talk about what's actually happening in our local market.
I'm Andrew Plank, also a Victoria realtor. We'll talk stats, timing, neighborhoods, and what we're seeing behind the scenes.
And I'm Jen Lowe, mortgage broker. I'm the numbers person of the group, and I'll chime in with the mortgage side.
Each week, we break down what the market means for you.
All focused right here on Greater Victoria.
No hype, no pressure, just honest conversations, local insight, and practical advice.
Let's get into it.
Good morning, everybody. It is August 12th. I'm Jane Johnston with the Bar Hill Group. Welcome to the Greater Victoria Real Estate Show. And I'm here with...
Hi, guys. Hi, everybody. I'm Andrew Plank. I'm with the Vibe Collective at Royal LePage. I'm a realtor as well. Jen.
Good morning. I am Jen Lowe, mortgage broker with Dominion Lending Center Modern Mortgage Group. I'm just getting over laryngitis, so it's an interesting voice for me today.
Good morning, Jen.
We're all going to do the voice today.
Yes.
This will be the show.
Awesome, right?
We're here with you in solidarity.
Thank you. Thank you.
Okay, we're doing a quick show today because Andrew has a course that's
Continuing
part of his
education.
Yeah.
Yes.
All right. So we're going to do a mortgage market update, and then we'll get into the topic of unexpected surprises from lenders. All right, Jen, how are we doing?
Not much happens in August, honestly. It's usually a pretty quiet month. Lots of people on holidays. The next Bank of Canada rate announcement is September 2nd. So what they'll be looking at is inflation numbers, employment, and oil prices really seem to be having an effect on the bond yields, which they do. And right now we're seeing a bit of upward pressure on fixed rates.
Okay.
Upward pressure on fixed rates. Okay, because it's tied to the bond yield.
Yeah, that's right.
Okay, and how are variable doing? What's a good rate today?
Great variable, we're seeing around 3.7, which is awesome. Fixed are around 4.39 for a fixed. So there's a big spread.
Yeah, that's a good spread.
Why is that?
You're taking more risk when you're going with a variable because rates 100% are going to fluctuate. You're not locked in at 3.7 for your term. It's going to go up and it's going to go down.
Yeah.
Right, but variable were a little higher before. They've come down quite a lot, I'm thinking.
That's right. This is the norm. Usually fixed rates are higher because you're paying a premium to have that peace of mind in knowing what your rate and payment is going to be for the full term. But there 100% was a time period where variable was higher than fixed, which meant, everybody was going with a fixed rate.
Because there is the premium, but there's also just the fundamental difference between how and why these two numbers are different and calculated. So
yes,
one is based on bond yields, and one is the overnight lending rate, I guess.
Correct.
Which I'm not sure what that's based on, but they are fundamentally two different things. So they always tend to follow that kind of pattern you're talking about. I feel bad for Jen because we're asking her a lot of questions and making her talk.
All good. I'll just drink a bit of tea and I'm good.
Awesome.
Okay, Jen. Okay, so I have a question for you.
Yes, of course.
It's interesting. I'm part of an online group which talks about money and stuff, and often they talk about interest rates anyway. So this lady is posting the other day, how come I went to this different lender? It was a mortgage broker, and this lender provided me with a much better rate. And I'm like, you got to look at the terms and conditions. One might be quoting you fixed, one might be quoting you variable. Like, people just simplify it all about rate. They don't look at anything else, I'm finding. Do you find that? Is there a bit of education?
People will send me a screenshot of what they found online.
Mm.
And it's like, you got to scroll to the bottom and see the little asterisks. Where is that rate? Like, what's the penalty to get out of it? is it for an insured mortgage, uninsured? There's so much that we need to dive into to determine if that rate makes sense or not for you.
If they're giving you a better rate, it's because they've protected themselves in some way, and that's where that interest rate differential comes in, like the mortgage penalties, various restrictions on what you can do with your mortgage. Because if they can protect themselves, they can charge less because they know they're going to be guaranteed that income.
Yeah.
Yep.
100%.
Okay. Shall we do the stats first and then the topic?
Sure, let's go.
Sounds good.
Weekly stats, Andrew.
Yeah, so new listings. Got my camera funny place. 295 new listings in the last week, 228 the week before. So we've got an increase in new listings, quite a bump actually. 147 properties went pending in the last week versus 119 the week before. Again, the week before was a long weekend, so we would anticipate and expect less from the week before. But so again, 147 pending this week, 119 the week before. Pretty much a wash for price decreases, 131 this week, 132 the week before. And in properties that expired, only 60 expired this week, 119 the week before. Again, that generally has to do with the transition between month to month.
And I will say there are multiple offers happening right now. As a listing agent, I was involved in 2 over the weekend. And so if you are interested in a property, I would say, here's my tip for you. Just write the offer, because you can avoid multiple offers don't necessarily happen at the beginning of a listing. They happen when people have time to look at the listing.
There's a buildup of interest and activity, and these buyers sitting on the fence gets heavier and heavier with all these buyers sitting on it. And then one buyer decides to make the offer, and then the rest of the buyers jump off the fence as well. And so you could be 2 months on market. It's really weird, but it happens a lot. 2 months on market, and suddenly you're in multiple offer situation.
Yeah, I'll just wait and see. I'm waiting.
Yeah.
For August, this week has been absolutely crazy. I can't believe, like, on Monday I got five to six purchases.
Yeah.
For clients, so
yeah,
it's very busy right now, which is very
active as well.
Yeah.
Yeah.
Is it normally busy for you in August?
No, August is usually quite quiet. People are on vacation, doing their thing. So very, very unique market this year, I would say.
It's extended. It was kind of like stretched, I would say.
Yeah.
Like not as busy as you would have expected in the spring, but busier overall at this time of year.
Yeah.
Agreed. Okay, so our sale to listing ratio last week was 49.83%. This week it was 52.19%. So that's good. And net unconditional sales, we were at, well, this chart looks different.
Yeah, we've changed this chart up. I'll explain it if you like.
Sure.
What we're trying to do here is actually take what we were doing was showing how many sales this month versus the same month for the full month last year. What we're doing now as well is projecting out. And I think that these tags might be a little bit incorrect, but what we're taking is imagining this month based on last year's numbers, projecting it out to what it would be based on the numbers so far this month. We also take last year's numbers and compare it to what that same number of days into the month this month. So let me explain this. So we have currently 135 net unconditional sales. That's the stat we normally keep. We've had 419 in the same month last year for the full month. If we take those 135 sales that we've had so far and project it forward based on the number of days in the month, we would have about 523 sales. So it looks like we could surpass last year's month. If we take last year's month, everybody's looking confused. I'm so sorry, you guys. Goodbye. we've lost all of our audience. If we take last year, 419, and compare it to so far, how far we are into this month, it would be 169 sales. Is that okay? That may not make sense to everyone. We'll clean this up for later. But what we were trying to do was get a little more apples to apples.
Yeah, but I think
I see the active listings coming down from where it was. I mean,
okay.
I'm focusing on that stat.
That stat, the active listings hasn't changed. We haven't added anything to that one. We have the total active listings this month so far at 3,762. Last year at the end of the month, we were at 3,598. That's not one we can project, though.
No.
I say we just chat about it rather than show this chart. I find this chart a bit confusing, honestly.
Okay.
Read.
All right.
But I get what you're trying to do. We're trying to figure out where we are relative to last year. But the thing is we can do that, but we also have to look like where we were.
Let's talk about this offline. Okay.
Okay. Where we were last. We're looking at the market. Okay. Anyway, it's too segmented for me. It needs to be more like what's happening in the year, because we were talking about this year being very slow in the spring and then starting up later, and it feels like it's going longer. So, anyway, there we go. So, relatively speaking, our numbers are down compared to last month in terms of total active listings, because we were over 4,000. Now we're at 3,762. We're still higher than last year at 3,598. All right, let's talk about what's going on. The topic is what happens when you have unexpected requirements from lenders. And this is like you get close to the end of your condition removal period and the lender says, oh, by the way, you need to change the hot water tank, or you need to update the oil tank or whatever. Jen, how often do you find this happens? And what are typical issues?
Well, each lender has a slightly different process. So you get an approval. Usually you get the approval and then the lender starts looking at the documents. So as the lender goes through the documents that we're providing, they may or may not go, you know what, we need to see their 2024 T4. I want to look at an average, make sure they're on target for their earnings, that kind of thing.
Okay.
Yep.
Okay. But what about in terms of the house itself? Because yesterday, Andrew and I were talking, there's
Jane and I are doing a deal together. We have a
yes.
We have a transaction where we are negotiating she's got a buyer for a property that I have listed.
Which is fun.
Now we are having fun debating certain elements.
So the hot water tank. So there was a little bit of misunderstanding yesterday. So what I said was, if the hot water tank is out of date, so if it's gone, they still can work. I mean, I've seen hot water tanks that are 100 years old that are still working, but the lender or the insurance may require the hot water tank to be replaced. And the reason for that is because if the hot water tank bursts, then your insurance for your house isn't covered. And especially if you're in a strata, that's why they tell you have to have it replaced like every 6 years, even though it may not be out of warranty yet. They want to get it replaced. So, yes, Andrew.
Yeah.
Well, let's hear from Jen, but then I want to debate.
Yeah. From the lender standpoint, they don't care about a hot water tank, but what they do care about is that there's insurance. Yeah. So it's more on the insurance piece that would be where the debate would happen.
Yeah. And where there's also some debate here is the insurance, an insurance provider does not provide insurance, even if a hot water tank is expired. It's expired. It's no longer, when we say expired, it just means it's no longer under warranty. So there's, I think in our industry, there's a belief that once it's out of warranty, that you no longer get insurance. But what we've observed and what we'll see sometimes is some bylaws on stratas requiring owners to keep their hot water tanks updated, so that they are always under warranty or replaced every X years, so that they don't end up with an inventory of hot water tanks in their strata that are older. Because if there is a loss, there's a very high deductible for water. They don't want to increase their risk there. But it's not a question of coverage.
And I disagree, because I've been there. I had a listing where the hot water tank above was not replaced, although required. And so we had a huge rigmarole over like 4 months. Luckily, we had a long possession date, and we had to figure out what the insurance coverage was, because the tank was out of date. And the water, of course, goes straight down
Multiple
into the
floors.
unit below.
Yeah.
Yeah.
Yeah, they'll go through multiple floors.
And so what they're doing is the insurance agent is trying to figure out, who do I blame when the accident happens? So I had another client who had their sprinkler system bust, and it went down 4 stories. And the people on the strata, the people in the building, weren't nice to my client, because they blamed her for hitting it. She didn't hit it. It just busted. Anyway, but they blamed her because they couldn't figure out why it had broken. Turns out this was a problem with the sensor.
Manufacturer.
Anyway,
yeah.
The manufacturer and this has happened in other buildings. There's a building on Bay Street that it's happened to. So the question is, like, who do we go after to pay the deductible? Because if it's the strata, then it's easy. And this also speaks to why you want your insurance to be the same for you as well as the strata, for there to be an alignment there, because they don't have to figure out where the cutoff is between the piping in the wall. If it's your problem or the strata, they're just going to cover it. Do you understand what I'm saying?
Yeah.
Well, to clarify what Jane's saying is, if you have, Stratus will always have their own, you have to have insurance on the building through the Strata Corporation. You get your own insurance for your contents and liability. If you have your policy for your contents and liability the same with the same provider, then you don't have 2 providers arguing over gray areas, where there always are gray areas. Same happens, and this is advice I give to my clients. If you are buying a home, it's insured. This is a small risk here, but it's insured, and there's been some ongoing damage that's covered. Let's say there's some sort of water damage that happens that nobody notices because it's a vacant home, and it's started to happen from a hot water tank leak 3 days before closing. And then on the day of closing, you get the place and you find flooded crawl space and all kinds of damage. You've got 2 insurance companies arguing, because you've got new insurance and then there's the seller's insurance from that just expired. If you get the same insurance company, and once again, you don't have 2 arguing, although that's a smaller argument. So here we are having a lesson in insurance. I did work in an insurance agency in another lifetime. So I actually had some certification in insurance, and was around it a lot. So I can't speak today from a place of authority, but I do believe that there's some nuances to this, and we do need to confirm this before we kind of start speaking about insurance with any kind of knowledge, because we are not experts in that.
Right. So, but where this comes up is, if you have an old oil tank, usually the lender will require you to replace the oil tank, or the insurance company.
Right.
What about aluminum wiring? Same thing. Jen, does that ever come up for you?
Yeah, it depends. If that's on the property disclosure statement, then yes, that can be an issue. But what the lender will add a condition that says, ensure that the insurance is aware of the wiring.
Of the latent defect.
Yeah. Also, heating systems like an older wood stove. Make sure that it is, it cannot be used, or it needs to be decommissioned, or it needs to get a wet certification before it can be used. And that's another thing both an insurer would want to know. And I think that we as real estate agents have kind of come to know and become aware of when it comes to lenders is the property disclosure statement needs to be fully filled out and accurate. But we're aware that when a lender reviews it, the lender might find some flags in there. And if those flags require more additional information, then we have to dive deeper into that.
Yeah.
It's often the case that we are negotiating at the end of the. I just had a building inspection. And this is another area where the buyer says, "Oh, should I share my building inspection with my insurance company? And this gets into this is related to lending. Should I share my building inspection with the insurance company? No, you can get a summary page from your building inspector that will be for insurance, but the insurer and the lender will sometimes take these things apart. Sometimes too much information is like too much disclosure is not a good thing, because they get fixated, I find, on certain elements, and then they start requiring additional documentation that really doesn't have to do much with anything other than them trying to fill a box, fill some sort of satisfaction that something somewhere needs to get put in, and it's not really relevant to, it's not deeply relevant. That's my experience.
Yeah. So what Andrew's saying is take the one pager. If your insurance company or if your inspector provides it, take the one pager, provide that information. And then if they want further information, answer it, but don't overshare, because it can cause a problem for you on your insurance. Yep. Anyway, we're not saying you want to be fraudulent in your application, but you don't need to overshare. Information.
Yeah. Don't overshare.
Andrew, it is 9:30.
Oh my God. I got to go. Okay.
Okay. We'll close out for you.
Thank you. Things lenders look for. I did a quick AI thing. Jen, maybe you can talk to some of this. Micro transfers, paper trails for micro transfers. If someone is doing a lot of transfers to someone on a regular basis, I guess they're concerned about unknown, untracked money coming or going.
Yes.
Especially for maybe some sort of spousal support that's not really being watched. Definitely underground oil tanks. Well flow potability tests, definitely the deep dives into strata stuff, and then proof of home insurance for legacy materials like the aluminum wiring. Thank you, everybody. I got to run. I got a course to take. Otherwise, I don't get credits in my continuing education. So I will see you later. Bye, guys.
Bye.
Bye.
All right, Jen, how you doing?
Great. Yes. So just to touch on a couple things that Andrew said, goes back to that property disclosure statement. If there's something noted on there, the lender will ask more questions. Which we have to dive into deeper. We take it from there.
And also, so yesterday we were talking about self-managed stratas and how that's hard to get funding on. And is the reason for that because of they're worried about money management and decision making?
Yes. And yes. How is that strata managed? Are there regular meetings? Is there proper maintenance that being done? Is there a depreciation report? Just because it's self-managed doesn't mean it's not managed, but they just ask more questions.
Yeah. And I think actually it's a good idea, because sometimes they can be a bit of kangaroo court. So I have found one recently. Somebody wanted to list their home, and it occurred to me like their well wasn't in the place where they said the well was going to be, and so we have to ensure that's all correct, because otherwise they wouldn't be able to get financing. If they sold the house, the new buyer would not be able to get the financing. Anyway, okay, my phone is going crazy, so let's close out. So Andrew, who was part of the show today, he can be reached at 250-360-6106. You can reach him at info@andrewplank.com. His website is andrewplank.com, and he is one of the partners of the Vibe Collective, and it's realvibe.ca. And Jen, how do people reach you?
I am at 250-217-4925. Email jen@jenlo.ca. And my website is jenlo.ca.
Yeah, and I'm Jane Johnston. I'm with the Briar Hill Group at Remax Camosa, and you can reach me at 250-744-0775. My email, actually a better one, is just briarhillgroup@gmail.com. My website's briarhillgroup.com, and follow me on Instagram, people, realtyteacher_Remax_Victoria. All right, that's all for today. We will see you next week. We're going to be going live at 9 a.m. Take care, everybody. Have a great week. Thanks for joining us on the Greater Victoria Real Estate Show.
We're here weekly, bringing you up-to-date insights on the Greater Victoria real estate market.
Make sure to follow and subscribe on YouTube, Facebook, and wherever you listen to podcasts so you'll never miss an update.
We'll be back next week with more clarity around what's happening and what it means for you.